Hi there, welcome to Kneppy Invest. One of the main reasons I started doing this channel was simply to share ideas with you. Now, I have been asked by quite a few of the viewers where I actually get my ideas from. And usually I say to them, my main source of ideas is ASX announcements. Announcements are released on the ASX every single trading day, and the majority of companies on the ASX will release announcements quite frequently. Those companies who don't release announcements quite frequently have to at least release half yearlies and yearlies for us to ponder over. So that's where I get my main source of ideas. But on occasion, I will get an idea from a viewer of this channel. And that is exactly what has happened to the company I'll be featuring in today's video. It was an idea thrown to me a few weeks ago. I took that idea, I looked at their comment because they did say why they asked or were suggesting the idea to me. I took that suggestion. I did a little bit of research on that company. I came to my own decision that this company belongs in my own portfolio, and I bought some shares in the featured company of today's video. And that's what I want you to do. I am not suggesting, advising that you buy this company. That's why I've got the question mark in the title of this video. I want you, if you like what you hear in today's video, to do your own research and come to the understanding or whatever realization that this company either doesn't or does belong in your own portfolio. And there's some things to like about this company and some things not to like. So probably the ultimate question, the first question is, why small caps? And that is a fairly important question because I prefer small caps over large caps. So let's have a look at the reason why I do prefer to invest in small caps. And the reason comes down to one company that I do own, and that company is Pro Medicus. Now, this particular chart of Pro Medicus is the weekly chart of the company from 2004 to the start of 2014. In fact, it's an ugly looking chart. And in 2013, Pro Medicus had a revenue of $11 million, not a lot, and a market cap of 42 million. Now, to be fair, Pro Medicus made a really important acquisition in 2009, a very important acquisition. Probably the timing of that acquisition was absolutely perfect. In fact, I want to do a video on this particular acquisition because it might be the most impactful, the most important acquisition we have seen on the ASX in the past 15 years because it has generated a massive amount of wealth for shareholders over the last 15 years. So what has happened to Pro Medicus during the last 10 years? So let's have a look at how valuable, what's the valuation of Pro Medicus in 2024. First thing I should point out, this is actually the weekly logarithmic chart of Pro Medicus. Now, typically I will look at linear charts, but when you see the price of something, company, and indice increasing significantly over time, the logarithmic chart is the way to go. I won't talk about why, but if you don't understand why, have a look at the linear chart of Pro Medicus in the last 10 years. You compare it to the logarithmic chart, and then you'll understand why. But anyway, the main thing is Pro Medicus' revenue has increased from $11 million in 2013 up to $125 million. So it's been a 10 bagger in terms of revenue during that period. But the market cap has gone from $40 million to $11.6 billion. Now, that does not mean that Mayfield Group will replicate what Pro Medicus has done, but this is just the potential you can find in the small cap or even micro cap land. This sort of significant shareholder wealth creation cannot happen in the big cap land, particularly when you talk about banks and miners. So this is simply why I like small caps. They're more exciting and there is way more potential in these small companies for significant growth in the future. Now, back in 2011, or maybe it was 10, the share price of Pro Medicus was 20 cents. Now it's about $115. And even though I am a shareholder of this company, I don't really pay attention to the share price because I'm not looking at selling this company at all right now. There's no reason to sell this company because the share price is still in a beautiful uptrend. The company is still growing. Maybe the valuation is in question, but the company keeps hitting it out the park when it comes to financials and when it comes to new contracts. So at this point in time, no reason to sell out of Pro Medicus. But this video is not on Pro Medicus. It's on the company that I'll be featuring in today's video. And that company is, wait for it. Have I even said what the company is? I'm kind of even sure. That company is Mayfield Group. Now let's have a look at Mayfield Group Holdings and what this company does. But before then, when I did receive this idea from a viewer of this channel, they did specify why they were giving this idea to me. And it comes back to some of the investments I have made over the past year or so. And these companies I am quite bullish on because of what they do and the future within this sector, this industry over the next 5 to 10 years. And those companies I'm talking about are Genesis Plus, G&P, Southern Cross Electrical Engineering, SXE, and IPD Group, which I've actually had for well over 1 year right now. So over the next 5 to 10 years, because of lack of spending in infrastructure, energy infrastructure, so power lines and stuff like that, and with the proliferation of AI over the next 5 to 10 years, there will have to be a significant amount of investment in infrastructure spending in this area, but not only in Australia, but also many countries overseas, including the United States. So I am looking for companies that will benefit from this expansive infrastructure spending that governments around the world will be doing over the next 5, 10 years. And I've already seen the signals, and I think the market is seeing the signals right now. And I'll talk about those signals during the rest of this video. In fact, Mayfield Group hinted at these signals in their last financial report. Now, onto Mayfield Group and what this company does. Now, Mayfield Group, as Mayfield Group, hasn't been around for long. It relisted on the ASX as Mayfield Group in late 2020 via another company called Steam Group. In fact, I had a look at the history of this company, and it actually goes way back because it must have been a mining exploring company at one point, and the vast majority of mining exploring companies never hit pay dirt, and eventually some of them will turn into another company. And so Mayfield Group has gone through about 5 or 6 name changes, but finally they became Mayfield Group in late 2020. Now, what does the company do? Why am I excited about Mayfield Group? And why have I taken a position in this company within days of receiving this idea? Now, based in South Australia, Mayfield Group provides electrical and telecommunication solutions to clients across Australia's electrical power infrastructure. That's the key right there. Australia's electrical power infrastructure. If I actually mentioned the world's electrical power infrastructure, I probably would have sold my house and bought 1 billion shares in this company. Now, I'm being a little bit over dramatic when I'm saying that. Now, Mayfield Group is just not one company. They actually have 3, I think you could call them subsidiaries or different companies. The first one is called Mayfield Industries. Now, this particular company was founded in 1936. So this company has been around a long time. In fact, if someone does ask you, or you hear someone talking about Mayfield Group, they might say that this company was founded in 1936. That's because of Mayfield Industries. Now, Mayfield Industries is a producer of customized control and protection systems, switchboards, kiosks, and transportable switch rooms for critical electrical infrastructure. So I'm definitely interested in Mayfield Industries. Now, the second subsidiary is Mayfield Services. This company was founded in 2008 as ST Solutions. It delivers high, medium, and low voltage infrastructure services. And the third subsidiary is ATI. This subsidiary was founded in 1991 and is a provider of telecommunications and critical power products and services. Now, on to a few facts in regards to Mayfield Group Holdings. The current market cap of the company is $78 million. Have a look at that because that's dependent on the share price, of course. Shares on issue, 90.5 million. So more than likely, because this company is profitable, generating cash flow, unless they made a significant acquisition, shares on issue should not rise. And that can be important for some people. So there won't be dilution in the future unless, again, they make a significant acquisition. Now, P ratio at current share price is 10.7. When I first looked at this company, the P ratio of the company was about 9.5. And as soon as I saw that, in fact, that was the second thing that drew me in. The first thing was what they did. The second thing was just the valuation. And I do think this company has potential to grow significantly in the future because of these tailwinds. Now, doesn't mean they will grow, just potential to grow. And I thought a P/E ratio of below 10 was attractive to me. And that is another reason why I took a position in this company, just based off the valuation and because of what they do. Now, the company also provides a dividend to the shareholders. This is not something that is attractive to me when it comes to an investment. In fact, I do prefer companies I invest in to limit their payout ratio when it comes to the dividend, because dividend suppresses innovation and growth. And that's why the big mature companies like banks have pretty big and good dividend yields, because they're barely growing at all. So I like to put my money into companies that are growing and companies that will probably provide a token dividend to their shareholders. So always look at payout ratio. So dividend yield of this company is 2.3%. Something else that might be important to some investors out there is skin in the game. Now, the largest shareholder of Mayfield Group is Nightingale Partners. They own 45% of the company, which does seem quite excessive. In fact, I Googled Nightingale Partners, and then I came to a realization that the chairman and managing director of Nightingale Partners, which is sort of a fund manager, but they only own 2 companies, according to what I saw. The chairman and managing director of Nightingale Partners is Lindsay Phillips. And Lindsay Phillips is a non-executive director of Mayfield Group. Now, I don't think he is the founder of Mayfield Industries, because if he was, he would be over 100 years old. But I'm not sure if he did have any connection to these 3 subsidiaries. But this fund manager, or whatever you want to call them, Nightingale Partners, has 45% holding in Mayfield Group. And Lindsay Phillips is a non-executive director of Mayfield Group. Alan Steele, another non-executive director of Mayfield Group, he owns 14.6%. So 2 non-executive directors either have indirect or direct holdings of over around about 60% of Mayfield Group. So I wouldn't call that skin in the game, but there is definitely some interest there among the non-executive directors of Mayfield Group. Now, when I first research a company, apart from looking at what the company does or trying to understand what the company does, is I look at the revenue. And ideally, I want to see revenue growing through time. Now, it's not an absolute necessity, but it is one thing I want to see. I want to see revenue growing through time. So what I've done in this particular slide is I've broken down the company's financials, 3 things in the financials or financial metrics: revenue, profit, and operating cash flow in 6-year or 6-month periods. So every 6 months or biannually, going back to the June half year of 2021. And the first thing I noted here when I look at this history is that revenue is not increasing. It's flat. There's a bit of seasonality there, but that's not important. The main thing is revenue is just going sideways. So that is the first question I would have of management. Why is revenue flat? Thankfully, they did have an answer, and the answer comes back to margins. Now, the second thing I noticed is the change, and this for the betterment, the change in profit and operating cash flow. The first 3 half years here, the company was struggling. In fact, if you go back through their announcements, the company did actually release a couple of profit warnings, which is not the sort of announcement you want to read. So barely profitable and barely operating cash flow in the first 3 half years of this particular period. So we're talking about 2021 into 2022. But things have improved for the company in the last 3 half years. In fact, the company has been profitable 3 half years in a row and has generated cash flow in the operations the last 3 half years in a row. So it does seem like there is a bit of a trend. And again, it comes back to margins, which we'll talk about in a second. So when I was doing my research on Mayfield Group, the first thing that attracted me to this company was what they were doing, the sector they're in, and that was attractive to me. The second thing was the valuation, P ratio of less than 10 for a company that has the potential is the best word there, to grow. Just because they have the potential doesn't mean they will grow, but they have that potential. The third thing, and this was probably the thing that really drew me into this company, was just some commentary within their half-year statement. Now, One of the things I don't like about Mayfield Group is the lack of marketing. They don't release many stuff. In fact, they don't release any presentations. So I would like a bit of increase in marketing around this company to the investment community. And maybe that's one of the reasons why I did not know this company existed, because their lack of marketing. If you go through their announcements, their price-sensitive announcements, in fact, I could do that right now. If you go through their price-sensitive announcements, I probably would assume that the most recent price-sensitive announcement would be the half yearly. So I'm going to do that right now off screen, and I'm just going to put in Mayfield Group. Look at their announcements. No recent announcements in the last month. In the last 3 months, they've released 2 announcements. One was a change of director's interest from Lindsay Phillips, and the most recent market-sensitive announcement was a half-year report and accounts. That's it. No presentation, no media release, nothing. That's one thing I'd like to see change when it comes to this company, is an increase in marketing, get their name out there among investors. And before that, the next price-sensitive announcement was the 25th of January, when they declared an interim dividend. And before that, it was Mayfield secures significant new orders in September 2023. So I'd like to see a little bit more action from Mayfield Group's marketing team. In fact, they probably don't have a marketing team, but maybe they should address that. Anyway, let's get to the point when I realized that I was very close to taking position in this company. It was in their commentary from their half-yearly report and account. So they did have a little bit of commentary here in a section that was titled Revenue and Activity. And there was just one little bit in this that really drew me in. Now, there were some positives and some negatives within this particular sector. So let's have a look at the positives and the negatives. And also, we can understand why the company's revenue has decreased. In fact, they mentioned in the first paragraph. The revenue decreased from the previous period because of a deliberate focus on manufacturing opportunities that offer higher profit margins. In fact, I do like that direction, that they understand what sections of the business have higher profit margins and they're focusing on that. So that is actually one thing that did draw me in, but it wasn't the thing. However, this decrease was partly offset by an increase in revenue from our telecommunications and power quality products and services, which had lower profit margins. That's okay, because if they keep on focusing on the higher profit margins, more than likely, if the company can increase their revenue, the bottom line, the profit and cash flow of the company will expand better or quicker than the revenue growth. Despite having a strong order book, which sounds promising, our revenue was adversely affected by client-induced delays, negative, that limited our operational activity. Nevertheless, these impacts were mitigated by satisfactory margins that improved throughout the half year. One thing I always look at is margins. I want to see margins increasing through time, if not increasing, at least flat. I don't want to see margins decreasing. So this company has something going for it. It is focusing on those parts of the business that have higher margins, and their margins are improving. Now we get to the point, the paragraph, the last paragraph, that really made my mind up in regards to taking position in this company. Our manufacturing operations in Henderson, West Australia, though this company was based out of South Australia, maybe it was founded in South Australia, that Mayfield Industries, their manufacturing operations are in Henderson. They're experiencing promising growth due to increasing demand. To accommodate this surge, we have planned further investments to enhance our capacity in the second half of 2024 and 2025. So this is exactly what I want to read. I want to read that this company is experiencing increasing demand, because I expect that. So my expectations are now being met by the company, it seems. Now, I do have one little red flag here, and that is the second part of that paragraph, that they are planning further investments. And that further investments could put a limit on this company's growth and even their profit in the next year or two. But don't forget, further investments means there is a better chance of longer term growth for this company. But many investors are just focused on the short term. So if you take a longer term view of this company, they're planning for further investments because of the growth the company is expecting over the next 5 or so years. Now let's have a look at the chart. And there is a little red flag here. and this might be a significant red flag for some investors out there. Shares in this company have been illiquid. Now, that does not bother me, particularly if I take a position in a company and I hope to have that position for a long period of time. I don't care about the liquidity. Some people might call it a lobster trap, which is absolutely ridiculous. It's a myth. If a company shares are hard to get out of, they're hard to get into. If they're easy to get into, they should be easy to get out of. That's not a lobster trap. And what I mean by that, I mean, when I bought shares in Mayfield Group, I didn't buy a market. I put a price I was willing to buy, and eventually my price was hit. And when I sell my shares in Mayfield Group, if I do, I'll just put a bid in. Now, the only thing that could go wrong there is if the company releases a significant profit downgrade or something like that, and the share price will fall significantly in a short period of time. But there will be increased liquidity at that point in time. The share price won't drop 50% in one day unless it's a really bad upgrade or downgrade. That won't happen. So I don't mind about liquidity. It's when you listen to Ausbiz The Core, a lot of those professionals talk about lobster traps and this company is too liquid. But sometimes they say so-and-so company is too liquid. And I just look and go, are you kidding me? Shares in this company are traded every single day for most of the day. It's not illiquid. That's not the definition of liquid. Now, when I say illiquid, let's have a look at the trade history of this company. So I'm doing this off screen again. Shares are traded most days. I'm looking at the last few weeks. Shares are traded most days, but if you go back further in time, not every day. In fact, there was a period of time here where shares weren't traded for about 4 or 5 days. So you do have to deal with that. But in saying that, when there is a lack of liquidity and good things are happening to a company, you can see the share price significantly rise. And that's what we're seeing now with Mayfield Group. In fact, the company hasn't seen a red day or a day when the shares have decreased since the 12th of April 2024. No, the 2nd of April 2024. So we're talking about over 1 month ago was the last time share price of this company actually dropped. And that's all I have for this look at Mayfield Group. This small cap to buy, question mark. Now, I've already taken a position in this company. So what do you think? Do you think this company has potential? If you like what you have heard in this video, you like what you've seen, maybe do some further research. Have a look at their half-year accounts. Go to the website. Have a look at their 3 industries or subsidiaries, not industries, subsidiaries. So Mayfield Industries, Mayfield Services, I think it was called, and AI. I was going to say AI. I think it's TI or something like that, ATI or something like that. I did actually go to their website. So I put in May right now. First thing that came up was Mayhawk, then Mayfield Group logo, Mayfield Group Holdings, May the 4th for some reason. And I'm pretty sure they do have, in fact, their website, if you just Google it, with South Australian origins from 1936. There you go. And if you go to their website, they do have our companies. So maybe I should call them companies instead of subsidiaries. And you can just click on their own company's websites. So go to Mayfield Industries. They have their own website. In fact, I did not go to their website. And you can talk, or you can see what sort of products they have. Transportable switch rooms, MV switchboards, secondary production systems, module demountable switchboards, fully withdrawable switchboards, and data center solutions. That's another thing that's very important. Another thing I'm very bullish on is data centers. And it seems just now that this subsidiary or this company has a foot in the door when it comes to data centers. Anyway, I'm rambling on now. So if you have any questions, any thoughts, leave those in the comment section of this particular video. Otherwise, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.